Markets down, blame the IMF. Our economy is slowing a tad, and double-digit stock price gainers, and I will name names. I'm Peter Switzer, I'm on my own, and I'm mad about money. Markets are down today after such a good run-up since post-Christmas rallies have kicked off. The reason is the IMF has put a forecast out downgrading the growth of the world economy. Now note, 3.7% goes down to 3.5%. Not a big downgrade, so things really haven't changed much. Look, and by the way, the IMF is not a very good growth guesser anyway. The history of their predictions aren't great. The bottom line is we were buying stocks when growth was 3.7. We're now selling at 3.5. This is just people in markets like reasons to buy and sell. This is a reason to sell. I think the critical thing is, will Donald Trump get a China trade deal? If we get that, markets will go up. If we don't, markets will go down. So, no bell today because our bell ringer is off getting married. Where is Andre? And let's go to the new topic. Our economy is slowing. Now, we were expected to grow at 3.5 or even 3.7%. That was the RBA's best guess. Now, things have slowed down, and part of the reasons why things have slowed down is that China is slowing down. And why? Well, the Trump trade deal impasse hasn't helped China's growth. China is actually slowing up because it's becoming a bigger and more developed economy. And developed economies don't grow at rates like, well, by the way, they're still growing at 6.4%. So they're still not like a normal Western economy. These usually grow around 2 or 3% if they're lucky. So in many ways, this is just an adjustment process. If Trump creates a trade deal and China is actually stimulating to try and offset the slowdown, I think we'll actually still come through with a pretty good growth number, maybe a bit under 3, 2.7, 2.8, still good numbers. Don't worry about all these negative headlines about the economy slowing. The only time you have to worry is if some external thing happens that really puts the kibosh on growth in the global economy. At the moment, there's nothing like that out there that's likely to happen. So trust me, if you're not prepared to take my word as an economist, well then take my word as a journalist. Don't worry about the Aussie economy. Now, the final thing, double-digit stock price gainers. I wrote a story for the Switzer report on Monday, and on the Monday before, I looked at the top 20 stocks. Inside the top 20 stocks, there was about 10 of those that were showing double-digit gains. I thought, let's have a look at the stocks numbered 21 to 50 in the ASX 200 index, our best 200 companies. And I was quite staggered. I've come up with 8 names of companies that are expected to have big gains. Let me name a few. Aristocrat Leisure, 35.7%. These are the calls from analysts from big investment banks or brokers who watch these companies closely. So Aristocrat Leisure, 35.7%. Caltex Australia, 18.5%. James Hardie, 38.8%. The Inconsistent Lendlease, 25.2%. Oil Search, 14.7%. You got a company like Origin, 21.5%. QBE, 11.8%. And the once troubled Santos, 15.7%. These are companies that are seen to have, over 2019, the potential to rise by those big numbers. Now, even if the analysts are only half right, they're still going to be good results. If you want to read about that, take out a 21-day free trial of the Switzer report. That's what we do in the report. We try and give you insights on stocks that really have a lot of potential. It should help you ultimately build your wealth and get richer, which I think is a pretty good idea. I'm Peter Switzer, and I'm mad about money.